Good afternoon, everyone. This is Connor from Zenfinex back with more market analysis for this time on the gold market. So much has changed since the video I recorded on gold 3 weeks ago, and I mentioned the stuttering price action and that we're shaping up for a huge move either side. And well, to my surprise, definitely, we've had some huge bearish pressure over the last few weeks. And in this video, I'm going to run through maybe the reasons why, what's changed from last time. I'm going to go through the fundamental events, which are going to decide the fate of this commodity. And then I'm going to move on to the chart to see if we can continue this bear run or it's just a correction from a stronger dollar. So when we think about what has changed from 3 weeks ago, well, the dollar seems to be coping a lot better. And on the DAXI chart, the dollar index chart, the 90 support levels holding really strong. There seems to be some really nice pockets of demand at this level, and it only seems natural really that we've had a bounce off of it. And as we know, a stronger dollar will put pressure on gold. Now, we also had positive US data releases yesterday, which has meant this fifth consecutive day of downside for gold. Now, core retail sales, they grew 5.9% month on month in January. This was compared to the 1% forecasted. And when you add this on to the 1.8% fall in December, you can see why investors are confused and they're reacting to this news. Now, the data also showed that the producer price index, the PPI, this grew 1.3% month on month in January, higher than the forecasted 0.4% in growth. Good news for the dollar in the short term. Now, this is where we have this really interesting situation. We need to determine the importance of this data compared to the FOMC and what the Fed are thinking. And yesterday we had the FOMC minutes. This did help us understand the way the Fed are thinking, and they really did put a stamp on this positive dollar outlook. They seemed calm in the face of inflationary pressure. The outlook was still dovish. What they said more than anything was that the conditions for reducing their massive asset purchase program will not be met for some time. They're not going to be taking their foot off the accelerator in terms of fiscal stimulus. And this just to me suggests that we're at a discount level for gold right now, and this dollar rally just seems to be a market correction, in my opinion. Now, we also have this interesting factor I mentioned last time, and it's this Bitcoin factor, the price of Bitcoin. And last time out, I mentioned Bitcoin's price is said to exceed $50,000 over the longer term. Well, it's done that in the last 3 weeks. And what I said that was, well, it's not a coincidence really that gold is now minus 6%, because what I said was that Bitcoin is winning the battle for these investment flows. And the fact that gold's minus 6%, Bitcoin's above 50,000, is it a coincidence? Some people don't agree with this method, but I think that Bitcoin is stealing investment flows from gold at the moment. How long it will last, I don't know, but for now, I think gold and Bitcoin are rivals, and we could see some competition there for investment flows. Okay, so let's have a look at the charts now to see if we can continue this bull run or whether it really is just a market correction. And I wanted to touch on the DAXI, the dollar index, as we know it has a huge influence on gold. And I just wanted to show you the things in perspective at the moment. Now, when you look at this chart like this, you think, oh, is the dollar doing well at the moment? Well, yes, we've had this pullback, and it's lasted really since the middle of January. But it really is just a pullback when you look at the bigger picture. We have this huge downside. And if I go on the 4 hour, I'll mention remember those 90 support levels that I was talking about, those demand zones, and why it was quite natural for there to be a bounce off it, because from around these 90 levels, we've had this reaction, maybe a third here, and we have this wick here as well. So a nice four times in the past this 90 level, maybe it's a psychological level, has seen supportive. And as you can see already, we are starting to retrace from that bullish impulse, which helps our thought of potentially a trend shift in gold. Now I'll move on to gold, because that's really what we want to talk about. And yes, from the highs that we had in August last year, I'll just mark that as our daily take profit, because these are the all-time highs. Nothing to worry about too much in the near term. Now on the daily chart, when I recorded the video 3 weeks ago, it was the 26th of January, this is where it was at. So this is what the chart would have looked like when I done that video 3 weeks ago. And I mentioned this daily order block being a key level for price to go into. And if I play out the chart from what's happened over the last few weeks, bang, look, we've had this reaction already. And this is Thursday of recording this video, and we're actually having quite a nice day on gold at the moment. And we do have some nice price and efficiency to fill. So when I'm looking for buying opportunities, I'll take profits. This is a nice level to start as our TP1. This would be a filling of the price inefficiency we have here on the daily chart. And if I go down to the, get rid of that, and I go down to the 4 hour, where can we look for price to go after that? Maybe our TP2. Well, I'm liking, if I zoom in so you can see, I'm liking this level here. So we've got TP1, TP2, sorry. And we've got TP1. Now these are levels that I can see gold getting to in the next few weeks, probably before the next time I do a gold video. So it'll be interesting to see where we are with gold here. If I add in the moving average indicator, not an indicator that I actually trade off, but I like to see, so we can see we're trading quite far away from it, and as we know, price will eventually tend to come back to it. So if price is likely to maybe level out, if I go onto the 1 hour, like I thought on the 1 hour, we have this cross on the moving average as well, which coincides with the fact it's in our order block. So let's look for a break of structure on the lower time frame to give us a real precise entry. Now, price action is quite messy here. Failed to create a new low down here. Price run up. I'm just following the price action. And the most bullish impulse that we've had from this level here, which I'm going to mark as our order block entry. So we've had this break of structure here, market structure there, and we've also had it here as well. So from this level, from this order block, we've had the break of structure from this high and the break of structure from this high. And to be honest, you could even move this level up to here, because at the end of the day, this was the last bearish pressure before this break of structure. So I quite like this level. We have actually come to test this level already, and if you drew a long position on there, you'd be running at around 2.5 R at the moment, with your targets being those daily and 4 hourly highs, which would be 15.38 for our TP1 and 22.18 for our TP2. So some really, and that's only price getting to 18.20, so you can see the power of refinement at the moment. Yeah, as I said, we've had this cross and moving average on the 1 hour, which gives us nice confluence as well. I'm only targeting areas where we've seen as a resistance zone. So what I'd like to see is price run up into these resistance zones. I'll take my profits there, and I'll look for an entry lower down as well. So that's it for today, guys. If you turn on your notifications, you'll catch these videos all the time. Please like and subscribe to this video as well. Drop any comments on the video itself, or you can message me on my Instagram. I like to hear other people's opinion on the markets at the moment. Really interesting levels of gold at the moment. Yeah, thank you guys, and I'll catch you all for the next video.